Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 15th of August. All right, now, as we just sort of wrap up the North American session here, the US dollar index slowly edging higher, pretty much on the back of euro drifting lower. You can see where that reaction on $1 to Trump's, his blurb about no extra tariffs. But those weak Chinese numbers have really sort of just slowly averted that, and it's back to 705 already. The big thing is the sort of risk-off scenario. It's not really hitting the major currency pairs, but we are seeing the the Dow back down 2.6%. The Donald will not be happy with that, and that's he can't control economics, and this is one thing he's going to learn. Now, one story that the media outlets are starting to run with again is the US yield curve inversion. Highlights of recession fears. Now, this has been coming up, I reckon, a dozen times over the last year. It's a story that lasts for a day or two. The curve corrects itself, and then it's gone, and then it just comes back. So I'm taking that with a grain of salt at this stage. There's nothing new with regards what's happening there. Now, if I just come back across here to the major pairs, just having a look at what's been going on. As I said, there's a few of the pairs with that risk-off scenario. You'd expect the Aussie and Kiwi to be probably a lot lower. If anything, they're just dribbling lower, but still within sort of recent ranges that they've been trading. So I'm not getting too excited about that. The dollar yen just corrected the move, that false artificial move that Trump generated. It's back to where it's sort of, almost where it was. And euro just starting to drift a little bit lower. Some of those euro numbers coming in a bit weaker. And you can see here that over the last couple of weeks, sterling is drifting lower. It's definitely lower on the daily and weeklies, but just trading sideways. No one's willing to really get short under 120 the figure and hold it for the fear of a massive rally. And no one's really getting long because they could see it dropping very quickly. So sterling, still a big question mark. Dollar CAD was the big rattler. It's oil's back at $55, and it's just coming up to test resistance on the top side there again, around 133 sort of 10. All right. So that's pretty much what the majors are doing, right? So when you come back to piecing it together, this is one of those weird weeks where Trump's involvement has really upset the natural flow of the currencies. Obviously the US CPI didn't really give us a hell of a lot to work with. But on the face of it, what have we got? Well, to me, it's a bit of a wait and see market at this point. We've got some key data coming out today which could give us some sort of ideas what the US dollar is doing. And obviously the Chinese US trade situation and Brexit are the major core drivers. So what does it do for our analysis? Well, overall, we've got a little bit of dollar strength on the dollar index and dollar CAD, and a little bit of weakness on euro. The rest of the pairs in a state of flux, not really going anywhere at this point. There's been no core fundamentals to drive anything sort of in specific directions. And this is where today's major data comes into play. We've got the Australian employment numbers. Now, this is a key data release that the RBA has signalled that they are keeping a close eye on. So, it's been pretty good of late, but any sign of weakness, and we'll start to factor in potential rate cuts in Australia again if these numbers are terrible. But they have been exceptionally good at this stage as everyone tries to keep up with their debt. And I think I read something last week that there's a record number of people in Australia who now have 2 jobs to try and manage their debt. So we know there's massive debt. It's only a matter of time when that blows up, but keep an eye on that number. UK retail sales, well, once again, with Brexit and everything else going on, I can't see that coming into play. But what I can see coming into play is the retail sales figures and the industrial production numbers out of the US. Now, we are starting to see the dollar just start to rally a little bit. If we get, all we need is a little bit of consistency here. We get stronger retail sales figures, we get stronger industrial production numbers, and they don't have to be massive. We already have the bottom pair sort of edging lower. This will give us a potential, at least a short-term trade to lock in some cash if these come into play. All right, so that's pretty much all we've got at this stage. You can't generate, cash out of thin air. We're waiting for opportunities. We're waiting for our technicals to line up. And now we've got a key bunch of data coming out. That employment number out of Australia is very aggressive, so just be careful with that. and the main one to watch would be the US retail sales. All right, guys, that's a bit of an early one from me, but have a good trade day, and we'll see how things pan out. Cheerio.